Traders get lost flipping between charts, jumping from one time frame to another. Here is how to build one top-down bias that never lies. In this video, I will teach you how to do your ultimate top-down analysis on gold. This is the most demanded video on my channel. Everybody that trades gold wants to understand how to do a top-down analysis on gold. When you understand how to do a top-down analysis on gold, it gives you the foundation and prepare you for my next videos on liquidity. Now let's dive into the chart. Now the first time frame we're going to be looking at would be what? Would be the monthly time frame on gold. Always make sure when you're trading gold, you're using Owanda time frame. It's very, very important, okay? Always make sure when you're trading gold, you're using the Owanda time frame. So the first thing you want to look out for is what? Is the monthly chart. Now, how does the monthly chart concerns each time frame? Let me bring this down to you here. How does the monthly chart concerns each time frame? Now, you need to understand that the monthly time frame is a time frame that helps you understand where that market is heading to for that month. Now, this is the month of September. How would you know where the market is heading to? You need to check the monthly time frame. When we enter the month of October, how would you know where that market is heading to? You need to check the monthly time frame. You only check the monthly time frame the first week of that month. Do you understand? The first week of that month. The same thing you do on the weekly time frame, that is what you do on the monthly time frame. But on the monthly time frame, you just need the last 2 candles, not 3. Because if you're checking 3 candles, meaning you're checking the last quarter. Do you understand? Just 2 candles. Now, when you come to the monthly time frame, the first thing you want to look out for is this candle and this candle. Now, what can you see from the last 2 candles? The first candle here was actually what? Was actually an exhaustion candle. You can actually see it, right? The first candle here was actually an exhaustion candle. And which candle followed next? A big bullish candle, meaning this exhaustion candle that was created, it has been engulfed, right? Meaning buyers have taken over here. And what do you expect to follow next? More push to the upside. Meaning automatically we're very sure that gold will continue to buy. Every retracement you see on gold is an opportunity for more buying. Because on the monthly time frame, you can already tell that the market was exhausted, the buyers took over. Then you move, as usual, you move to the weekly time frame. Remember, this is a top-down analysis video. Now, when you come to the weekly time frame, what do you want to pay attention to? The last 3 candles. Don't forget that rule. The last 3 candles. Now, where is the last 3 candles? Number 1 is what? 1, 2, and what? 3. Now, the last 3 candles was actually bullish. 1, 2, 3. Meaning automatically, after this market created a lower high, went up, created a lower high, the market has been pumping. We've not seen a lower high. Do you understand? Meaning gold is also due for a retracement. Okay? Gold is also due for a retracement. Of course, we all know the dollar is weak due to the fundamental analysis that came out and also the Fed's cutting rates. We all know the dollar is weak. But what would happen moving forward? The dollar can actually push gold back to this level here. And whenever gold should come to 3,499 or 3,500, what do? You look for a buy to the upside. Because on the monthly time frame, we can actually tell that gold is very bullish, and on the weekly time frame, we can tell that the last 3 candles was a push, was a momentum. We've not gotten the retracement. So when we see that retracement, we continue buying. So for now, even if you're buying 1 to 2, 1 to 3, you close. 1 to 2, 1 to 3, you close until the market retraces back to 3,500. That is when you can buy confidently and go for long. Please don't forget. Alright? Now, then we move to what? Move to the daily time frame. Now, when we come to the daily time frame, of course, you draw your support and resistance. We're done with that aspect. Now, we're using some of the analysis we've already done on the weekly, some of the levels which you can actually see here. This is a key level that we want to pay attention to. Since the market is already at this point, we're no longer paying attention to what? We're no longer paying attention to the support. We just want to pay attention to the resistance that will now turn support. Okay? Now, on this part here, we can actually see that, okay, these are where the market actually created what? This is where it's likely to be the resistance of the market. Okay? Now, we want to pay attention to some candles that we can see that were part of the momentum. Some candles that sellers tried to enter that were part of the momentum. This is it here. Okay? This last red candle here that you can see. This is the last candle that was created, meaning the last sellers that tried to push the market down before what? Before buyers continued buying the market aggressively. Now, the reason why I drew this line on this candle, remember this is the daily time frame. The reason why I drew this line on this candle is because any day the market starts coming back down, immediately the market is approaching here, we might see a huge spike before the market will come back up. Do you understand? Another scenario, we can actually see something like this. Then before the market will come back up, test here, and before the market will continue pushing. Why? Because immediately the market is approaching this zone, the remaining sellers that are here, they will sell that market down again, thinking maybe the market will dig back into this resistance and continue to sell. Do you understand? But when they sell this market into this zone, buyers will push it back up, wait for a retracement, and they will continue buying. Do you understand? Now, from the monthly time frame, what do you use the monthly time frame to determine the direction of the market for that month? You go to the weekly time frame, you check your last 3 candles to know the direction for that week. Come to your daily, look for key levels where you're likely to buy or sell. Any day the market should come there. Meaning, whatever exhaustion is being created here. Whatever exhaustion is being created here. So long as gold does not break above here and continue pumping, you know that the next thing that will happen will just be an exhaustion that will lead to a huge dump back to this level here. Alright? Now we move to the 4-hour time frame. Now when we move to the 4-hour time frame, what do you do on the 4-hour time frame? You want to pay attention to the structures that have been created. Now what are the structures that you can see here? An exhaustion. And now that you've seen an exhaustion, what will an exhaustion lead to? Liquidity being cleared, right? Remember, whenever there's an exhaustion, there's a liquidity at the top, there's a liquidity at the bottom. The market will always go back to clear that liquidity and dump, or the market will dump, clear the liquidity and pump. Do you understand? Yeah, always remember. So now that you can spot this exhaustion on your 4-hour, what are you expecting the market to do? The market has cleared the liquidity. Now the market is coming back down. Now this last candle here is what is fueling this buy to the upside. Okay? This last candle here is what is fueling this buy to the upside. In my video where I talked about POI levels on gold, if you watch that video, this shouldn't be new to you. These candles are what is fueling that buy. So the only time where you know that gold will come back to this daily level is if gold should break below here. Immediately gold breaks below here, you know gold will come back to retrace and come back to this level where you want to buy. Don't forget. But if gold continues to respect this level, ends up creating an accumulation, what will happen? More pump to the upside will continue. Now you've moved from your monthly, weekly, daily, 4-hour. Now you want to intraday trade. You want to buy, you want to sell. You don't want to waste time and be waiting for a market to play out, because most of you don't have patience. And when you're trading gold, you must have patience. If not, you will blow countless account until you start collecting investment and you end up putting yourself in deep soup. Now let's move to the 1 hour for intraday, right? Now when we move to the 1 hour time frame, what can you see here? You can clearly see that this market is creating an inverse head. This is the head. Now where do you want to buy this market? You want to wait for this market to come to where? To come to this zone. Then you place a buy. Thereby the market will end up creating what? An inverse head and shoulder. Always remember, I've told you guys, whenever you spot an inverse head and shoulder, is actually what? A reversal pattern that is comparative. So if you should come here, of course, it's not immediately it comes here that you buy. Immediately you come to this zone, you want to watch out for rejection. You want to see how the market will struggle before you look for buying. You don't just see this and boom, you're buying. No. You wait for the market to come, then you watch out for that rejection, then you buy. So you can see on your 4-hour, you can still what? You can still buy gold. Target 1 to 2, 1 to 3. You don't need to hold it for long because you know the market is due for a huge retracement on your weekly. But on your monthly and on your 4-hour, you're still bullish. But on your daily, the market is due for a retracement. On your weekly, the market is due for a retracement. So you don't want to be caught in those retracements. When the market does give you 1 to 2, 1 to 3, you're good. This is how you do your top-down analysis from your monthly down to your 1 hour time frame. Then if you feel this SL is too big, you scale down to 15 minutes or 5 minutes and you get your buy and you get your sell. Thank you all so much for watching this video. Remember, I don't offer investment. I never ask you to send money to me. We are snipers. We don't rush the market. We wait for the market to come to us. Peace.